Good morning from Los Angeles. Welcome to Power Hour, my uh, weekly Friday edition of the live streams that I'm doing. So, as you all know, we have Power Hour on Fridays, 10 a.m. Pacific, 1 p.m. Eastern. We have Trading with Sergio Mondays and Wednesdays. Every Monday and Wednesday. Hold on a second. Let me turn my phone off, which is bad on my part. Actually, that's YouTube giving me the notification. So before I forget, please subscribe, turn on all notifications so you can get the pre-warning of Sergio going live. But so here's the schedule for the week. Mondays, Wednesday, Trading with Sergio, still going to go on. I'm going to do my first members only live stream, which is going to be more hands-on, a much smaller group, obviously, because not everybody is a member on the channel yet. But we're hoping that we grow the membership, because I think you will get value out of your dollars on that one. The other thing is that first members only that I mentioned is going to be October 4th. I think it's a Thursday, 10 a.m. Pacific, 1 p.m. Eastern. We may even actually, according to, or depending on how many people I can put on the screen, we may do like, I think it's 10 with StreamYard or 20, I'm not sure. I'll ask Chris, who's watching in the background. Hey, boss. And so we may all be just coming on the screen, right? You can do that from your cell phone or whatever. So please, if you're interested, become a member of the channel. I think it's worth a Happy Meal, probably. That's what we're charging at the moment. But you know, the Monday, Wednesdays Trading with Sergio is going to continue. Friday Power Hours are obviously going to continue, because that's where I do the topics, and talking about topics before, so you guys don't get bored. And let me give you a little rundown of what I'm going to be talking about today. So one, for sure, the consumer is singing a different tune than Washington is. So first topic is going to be U.S. consumer thinks the economy is already in a recession. Do you guys agree? Do you guys disagree? You know, we'll debate that. So also on this Power Hour, I mean, we're going to the usual Q&A. Please think of your questions, type them in the chat. I will get to them towards the end after I do my watch list and my positions with full transparency. A few of them are working well. Hopefully you followed. If you did follow, that was not trading advice. That was not investing advice. That was just information and education. We need to do that. So another topic that I'm going to talk about today is China panicking? Well, I think they are. And China is panicking and joining the global central banks by lowering interest rates. Massively, actually. So we're going to talk about that. So another topic, the third topic I'm going to talk about is, I've been, I don't know, I think 4 months now, maybe something like that, since I started the channel. What do I talk about the most? The $35 trillion national debt that's going up by $1 trillion every 100 days. T with a T, not B. So somebody holds this bag, right? Well, I call it a bag because it's a bag of $35 trillion of IOUs, paper. Who's holding the bag, right? I mean, I got some email saying that, who owns this stuff? Well, we're going to break that down for you. Another thing is, I had a negative bias on the market literally last 5-6 months. I'm seeing signs that are disturbing to me. Now, that's my personal opinion. You may, a lot of you may say stocks only go up. I'm like, okay, fine. That's why you're watching me, because I'm giving you a different perspective. I'm not bearish. I'm not, a perma bear or a perma bull, I'll just go where the market's taking me, right? Even within a bear market, there are things that go up. You just have to find them. It's like finding a needle in a haystack, but they are there. And then I have the tools to do it, and I will share them with you, obviously, and give you guys a leg up instead of you just scouring through 10,000 stocks and see what you can make money with. So the last two topics are going to be numbers, facts, why Wall Street is thinking, because markets making all-time highs day after day, just grinding higher in small, increments, but still grinding higher. So that's because Wall Street overwhelmingly is thinking that Federal Reserve is going to accomplish a soft landing. Are they? How many soft landings have been in the past? Have you guys done your research? I have. I've seen this movie before. There are people actually who agree with me on Twitter, which actually one of them I'm going to interview next Friday. You guys have to stay tuned for that. And again, if you did not watch the interview in Insiders of Wall Street with Anthony Crudele, it's on the channel. Amazing, amazing, amazing trader, OG of traders. Please go watch it. Please go listen to him. Please learn from his experience. If you're not learning from me, you have to learn from these OGs, because I think I'm in the presence of royalty when I talk to these people. Another one is coming up next Friday. We're going to record it and then probably release it the week after. Another one is coming up on Bitcoin. I mean, this gentleman has done something that I think needs to just be talked about. Again, none of this is advice. None of this is trading or financial advice. It is what he's done is working for him. It may not work for everyone, but then I will interview him as well and put it on the channel on Insiders of Wall Street. So we're trying to create this variety of content that is applicable to every person's situation. Again, you may say, well, Serge, you're dealing with a lot more dollars in your trading account. I can't do that. Yes, you can. The percentages are going to be the same. So if I buy an option at $1 or sell it at $1.60, 70, I made 60, 70%. You can buy one, but the percentage is going to be the same. The zeros in the account obviously are going to be different for everybody. And there are people who trade with millions of dollars, which are way above my pay grade. But all it is how you apply the information I'm providing and what you're doing with that information. And the last topic is obviously, and again, these are all things that I'm seeing that are making me uncomfortable. Does not mean that it's going to happen immediately, imminently. Does not mean that it's going to happen, period. But it's a topic of conversation. It's my opinion only. I've seen all these movies before. So when you see a lot of movies, and when I say movies, I'm not talking in the literal sense. I've seen all these movies before. When you see these movies, and then some movies you laugh, some movies you cry, some movies it's like a warning shot. Some movies actually reflect exactly what's happening in your life. That's why they're so popular. But this is finance. Finance is all numbers, zeros and ones, and dollars going in, going out. It's simple, black and white, really. This is as black and white as life can get. So the last topic is going to be, actually, I'm reading the headline from my phone, is 2008 crash signs are everywhere. How to protect your gains and preserve your capital. Because as Anthony Crudele said towards the end of our interview, again, please go watch it. It's Insiders of Wall Street. He said, it's not what you make. It's not how you make it. It's how to keep it. That is the most important thing. If there is a downturn or a drawdown in the markets, a lot of people make a lot of money when markets are going up. Justifiably so. I mean, you can throw a dart on Wall Street Journal paper or whatever it is, pick that stock. Well, a rising tide will lift all boats kind of a strategy. Some will do better than what you pick, but then that pick most likely is going to go up, because bull markets or cyclical or secular bull markets are that way. And bull markets last a lot longer than people anticipate. And I've said this before, we stair step up and then we take the express elevator down. This is the history. This is what has happened. This is what's going to happen again. Is it going to happen this year? Is it going to happen next year? It's an election year. Will they allow the market to crash before the elections? No. My opinion, no. But I'm just putting out the warning signs, because if it does happen, and when I come on, January of 2025, hopefully I'm still around, I don't want to say, hey, I told you so, but I am seeing these things. And like I said, I've seen this movie before. I think 5 times, 4 or 5 times, under different circumstances. 87 crash. I was super young. I didn't even know what the heck was going on. The small UIL crash, then the hedge fund blown up crash, and the 2008 great financial crisis, the 2000 dot-com bubble, COVID, obviously, right? The Black Swan event that nobody anticipated. But these were all different movies. But ultimately, they put out certain signs, that those signs, when they all line up, should give you the warning. If not, forget making money. I will make money when the market goes down. I'll probably make more money than if the market goes up, because I have the tools, I have the education, and so I'm going to pass those along. And I have been in small increments, have been passing those on. But since I'm going to be doing these live streams, I am sure there will be a day that the market's down 1,000 points, and you guys will see in action what I'm doing, how I'm protecting my portfolio, how I'm hedging it. But besides that, I will also talk today quite a bit about what I've been doing over the last probably at least 15 years is you create positions, right? You create positions thinking something in that nature is going to happen, is very likely because your setup tells you so. But if you look at it in each individual position, undoubtedly there's going to be losses in there, losers in there, without a question. But what I look at more and more, especially I started doing this literally 15 years ago, is what is the overall equity doing? So let's say if you start with $1, you may have 10 positions live within an account. But if your account is going from $1 to $1.10, that's 10%. It doesn't matter if one position in your account went up 100%, the other one went down 50%. Ultimately, we're playing the equity game, right? So you have to pay attention to your equity, your starting point. That's why initially I suggested to all of you that don't mix your regular account with trading account. Don't mix your long-term portfolio with a trading account. Trading account, call it gambling money, call it whatever it is. If you called it gambling, 20 years ago, I would have beat you up. But today, no, it is. Everybody has a, cell phone in their pocket. They can swing options, do whatever the heck they want. But what I'm trying to explain to you guys is that separate all this. Have just specific trading account. Don't touch the money, right? Don't pay your rent with that. What you should do is you should just trade the equity. And sometimes it's going to fluctuate. Obviously, it's going to fluctuate, but sometimes you're going to have drawdowns. That's when the risk management comes into play. Not only risk manage on an individual stock basis or equity or ETF or whatever you're buying and selling, you should look into it as an overall equity game. It's because that's what's going to be in your pocket at the end of the year, right? Analyze your equity, analyze your trades, then on a micro basis say, okay, this one went up 60%, this one I lost 20% on. That's what, but my overall equity went up 10% this month. Okay, next month, my overall equity went down 3% because this was a bad trade. I will not duplicate this. So what I'm trying to explain to you guys is that trade the equity. Do not trade individual positions, because a lot of people do the YOLO trading, which was, I think it was Wednesday's headline, which was YOLO, HODL, and FOMO. If you do that, yeah, you may get 150%, 200, 500% gain on your account. Great. But longevity is what Anthony Crudele said. Longevity is what counts. It's not a sprint, it's a marathon. So with all that, I'm trying to make sure you guys understand what trading equity means. And hopefully by the end of today, you guys will have a good idea about that. So and set a goal. What is your goal? And set a realistic goal. I mean, is your goal to make 100%? Okay, if S&P 500 goes up on average, up and down in the last 100 years, 10, 11, 10%, let's say, is your goal to beat the benchmark? So that means 20% gain is double the benchmark. So that should make you happy. But a lot of people, look at 20% a year or 30% a year, and they go, that's nothing. I'm like, no, it is great. It's unbelievable. You're beating the benchmark by 2x, 3x, 4x. And that's what I try to do on my trading account. On my long-term portfolio, absolutely not. I'm still trying to beat the benchmark, but not to the point of 50, 80, 100%, right? So, next couple of weeks, I will share, because I had done this before, I will share my actual trading account numbers, and you guys will see how I treat my equity. I treat my equity as my benchmark. So if my equity goes from $1,000 to $1,500 at the end of the year, that's 50%. Well, if you can duplicate that, right, year after year, think about it. I talked about the rule of 72. Rule of 72 is dividing your return into 72. So if I'm getting, let's go with an average number of 25%. And so 72 divided by 25 is less than 3. So that means every 2.8 years, that trading account is doubling, right? So think of it that way. Set a goal. And when you get there, slow down, stop, don't push it, because market has a way of taking it back. So once you make it, again, like Anthony Crudelli said during our interview, please go watch it. I'm not saying it because of the clicks. I really don't care. What I care about is listening to these people who had the longevity for 20, 30 years. Yes, have they blown accounts? Yes, they have gone through all of it, but now they're talking from their experiences, which is invaluable to all of you. It should be. My experiences are mine, but when I share it with you, it's yours. So learn from that. Learn from the agony of losses, learn from blowing accounts. It is going to happen, but I'm still here after 30 years, right? And if you can do that yourself, then you're going to be in much better position in life financially than most likely me as well, which is great, right? So pass it. And then once you learn this, pass it on to your kids, pass it on to your friends. And again, it's not about them coming, watching me, subscribing, memberships. This is nothing. That's bullshit money. I can make the money I'm going to hope to make on YouTube or whatever in literally 5 minutes by trading. It's not about that. It's about paying it forward. It's about teaching. It's about educating. And once you guys do that, then you get so much more satisfaction out of that than actual money. Of course, money is the root of all evil. We all need it. But it's not about that, right? Please, when you get older like me, you will have more wisdom and you will just figure out. And all these interviews I'm doing, as you notice, I did 2 with Jack Barugian, head of the CME, started as a runner like these guys in the back. Same thing with Anthony Crudelli, started as a runner at 18, had a heart attack at 36 in front of his computer. This is a high stress thing that we're doing, okay? But learn from these people and hopefully, pass it around. And maybe this is interesting topic, to discuss at work, at the water cooler, since I'm a Buffalo Bills fan now because of Chris. Now I'm going to start watching American football, actually, which is, I don't know, it's like seems like a complete waste of time to me, because 1 hour game lasts like 4.5 hours. So I can eat more chips and hot dogs and drink more beer. I'm like, I don't know. But I will indulge him this year as a Buffalo Bills fan. I think I'm even going to go buy a jersey now. But my point is, in all of this, summing it up, learn from this. Learn from these OGs. And that happens by applying the same things. Again, it may not be individual stock picks. We all have those, right? Even the community gave a couple which are doing great, right? So Let's exchange our ideas. But in general, you cannot learn experience. You cannot buy experience. That's invaluable. That's priceless to me, anyway. So if you respect me, if you respect what I'm saying, please share it, because this is, I think it's invaluable advice. So with all that said, um, uh, I will, okay, the chat's actually busy today. So I'm going to go at the end, answer the, Chris is here. He's putting his stuff in the chat. So the first topic we're going to talk about is the U.S. consumer already thinks the economy is in a recession. And now, when I say these things, that's the headline, I back them up with facts. You do agree? You don't agree? If you do agree, right, great. If you don't, let's have a conversation, civil conversation. Put it in the chat. But if you do become a member, by the way, we will probably have this conversation face to face, because I will send you guys the StreamYard link, and we'll have all of you on, and you guys will ask me all the questions. You guys will ask me. I thought it's more of a personal touch kind of a thing, more of a mentoring session of 60 minutes, and I think it's worth definitely more than a Happy Meal or a Big Mac meal. So with that said, let's get into it. The first topic is going to be U.S. consumer thinks the economy already is in a recession. Agree? Disagree? Well, here they go. So this is some, not body, but it's a Kobesi letter that I am a member on Twitter. So my Twitter handle is also below, probably. Chris probably always does that. So go follow me, and then I follow these people. I highly recommend that you go follow these people. I mean, seriously, because the reason is, see, we don't have an attention span these days. We want everything like in a condensed 15-second soundbite. Well, I can't do better than this. If I could, I would. But that's why I follow them, because they put everything in such a condensed and sensible manner, with always a picture, because to me, pictures are worth 1,000 words. Here we go. So U.S. consumers believe the economy is in a recession. Americans' assessment of current economic conditions have hit the lowest level since 2020. What happened in 2020, people? Late 2019, early 2020, COVID showed up, right? So if we're at that level, this is the warning shot. Does not mean anything to most of you probably, but in your daily lives, you're already experiencing all of this, okay? Because the Federal Reserve is one thing, Washington is another thing, elections are another thing, politics is another thing. Well, we all have accounts. We all know what we're spending. We all know what's coming in. We all know what our income is. We all know what our expenditures are. Well, the American public thinks differently than Washington and the Fed does. And this is also in line with levels seen during the 2008 financial crisis. Here comes another warning shot. Again, does not mean this is going to happen. But does history repeat itself? I'm going to say this a lot today. Does history repeat itself? Is it different this time? I'm too old to say, to convince you all that history does not repeat. History does repeat, because the world is run by humans who make the same mistake over and over and over, although it's short term, right? But now, if one of these events takes place and you have learned from your past experience how to take advantage of it, that's gold, right? That will set you up in life forever. Over the last 50 years, whenever the difference between the present conditions and expectations hit at least 30 points, and we're going to look at the chart in a minute, the economy was in a recession, not is, was in a recession already, or is going in a recession, right? It's now at 30 plus points as seen in the chart. Consumers, and they finish with always this one-liners that I know I cannot do better than this, right? It's condensed. It's everything that I want to convey to you, and then that's why I'm a member. I mean, these people have become my Bible, really, because I am trying to explain, or come close to condensing a complicated subject as this into 10 sentences. I don't know if they use ChatGPT or not, but I don't care. I like it. I'm going to keep using them, and you guys will see a lot of it. So I highly recommend you guys go. And I have no affiliation with the Kobesi letter. If they do watch this, hello to the Kobesi letter. I think it's amazing. So here's the chart. Picture's worth 1,000 words, right? Americans think the economy has fallen and won't get up. Now, that's a joke, obviously. 6 months change in Americans' assessment of present situation, less expectations. Okay, so let's look at this chart. The zero line, as you guys can see, is in the middle, right? In 1980, when you have that dip, jagged dips, right? Those are all recessions, and we all know what kind of damage it could cause. And in 1980, we had a recession, obviously. In 1990, we had a recession. In 2000, we had a recession. We know the dot-com bubble. That's that third jagged V kind of a thing there. In 2008, we know, and that was a prolonged one, actually, because of the great financial crisis. It just it took a while to clean up that mess with TARP and ZERP and all that goodness. And look at the 2021. When was that? That was the pandemic, right? And the whole economy shut down. And while we had a very short-lived recession and a ridiculously strong bounce, because the Fed printed $8 trillion and put it into the economy in everybody's pockets. Now, here's the warning shot. Doesn't mean it's going to happen. But if every time this indicator gets to a negative 30 and it touches it and goes under it, within 6 months from then, there will be a recession. And since the market is a leading indicator, these are all laggers, but market is always a leading indicator. Market is always 6 to 8 months ahead. That's why I'm being really cautious with my trading, and I'm not anticipating it. When the market sells off, it will sell off. I'm not going to guess when. I'm not that good. If anybody says they are, good for them. But what I'll do is I'll read all these tea leaves, and then I'll try to time it to a point, but I'm not going to guess it. If I guess it, I'm just going to blow my account. So, and now we're touching 30. So, I don't know how many of you are in the chat, but put it in there. Do you guys think the economy is already recession? Are you already in a recession? Or have you been in a recession? Have you been struggling? Because you represent the American public. Washington doesn't represent the American public. They just talk out of their ass to get elected again and again and again. And I don't know. But we depend on these people. We send them our tax dollars. Right? So you have to listen to the macro. Are you already? And that's the first warning sign. So to me, I talk to, as you guys know from the other channel, I talk to a lot of people. I don't like what I'm seeing, but then maybe I'm just kind of surrounded with that vibe that I can't see anything out of it. Well, no, I think I'm able to separate this picture from what's happening, because drivers are not the only people I talk to. I have a wide circle of friends who we talk about these things, and even the well-to-do ones are seeing some signs of cracks. Even the well-to-do ones have maxed out their credit cards. So I'm just seeing this picture that is kind of pushing me towards my bias more and more. And it's a matter of time, I'm saying. So if you agree, you agree. If not, put it in the chat. I will answer all the chat questions or comments. So the second topic I'm going to talk about today is China panicking? I think they are. Again, I will explain this why with the Kobesi letter screenshots from Twitter. China is panicking, they're saying. I'm saying, is China panicking? Well, is the Fed panicking? Because Fed keeps saying everything is fine. Economy is growing at a good pace. Unemployment is fine. Inflation is going lower and lower. In fact, today was another indicator. Inflation is going lower. I'm calling it they're gaslighting you. Inflation is not going lower. I have so much content on the channel. All you have to do is go back, read the headline. Is the U.S. government gaslighting you? Is inflation really exactly what they say it is? Well, go check those out. And then it has data in it, and go check them out. Let's see if you agree or disagree, and please share, seriously. So in fact, China, by the way, why are they panicking? If everything is so good, according to the Fed, everything is great, why cut the interest rates by 50 basis points? They did it last week. Why? You only cut rates when you see a blurry picture ahead, right? And they're forecast to cut by 200 basis points by the end of next year. That's 2 percentage points. What I know from my economics degree and finance degree is Fed only cuts rates when the stuff is about to hit the fan. So they're trying to preempt it, right? And all global central banks are cutting rates. If everything is so good, why are we cutting rates? Now, the danger of this is going to be a reacceleration of inflation. Market is definitely not pricing that in, which 100% I'm convinced of that. If I'm convinced, is my name. So my point is, if everything is great, why are we cutting rates globally? I don't know. Are we forecasting something that most people are not talking about? Well, we'll see. So China is panicking. In fact, China is showing 2008-like signs as they are on the brink of a severe recession. So you guys understand this is the theme today, right? Recession, yes, no, why, warning signs, forewarned, be ready, be careful, may not happen, but at least you guys have at least an idea of what I'm looking at on the macro side. Trading is different. Macro is something that you need to pay attention to. So over the last 2 days, China has begun pandemic level stimulus. 100% correct. This actually did happen Wednesday. Chinese central bank cut the rates by 50 basis points. So we're at 5% and we cut 50 basis points. Okay. They're at 1.25% and they cut 50 basis points. Think about it. So is China dragging the global economy into a recession? Remember, we used to have a saying, as the US goes, so goes the global economy. Isn't it funny, after like 20, 25, 30 years of us shipping all the manufacturing jobs to China, now China is if China gets a cold, the rest of the world catches pneumonia? Is that what's happening here? You guys see this trend over the last 30 years? Well, yeah, but that's not the topic. So here are a couple extra charts. Okay, so the chart on the left is China's housing market collapsing, literally collapsing. Now, most of these, by the way, as you guys know, Chinese economy is the government's economy. Government has their hands, the Chinese Communist Party, the CCP, has their hands in everything. They practically own every business. Although there are private businesses like Alibaba's and Tencent and Baidu and whatever. As you know, all these are all replacements of Google's and Twitter's and Facebook's, because China does not allow, Chinese internet is closed. So China does not allow any of the stuff that goes on in our country with this lives matter and that happens and this happens and abortion, and none of that stuff happens in China. Everything is controlled by the government, by the Chinese Communist Party. So the first signs of weakness came after China's real estate index fell a massive 82% in just over 2 years. Think about this. And then look at our housing prices, where they are. I don't know. Evergrande is one of China's real estate giants, again, controlled by the government. This came as Evergrande, one of China's real estate giants, filed Chapter 15 bankruptcy. And look at that chart. Look at that chart. That's the Chinese real estate market, okay? This put the index back down to 2008 levels. And what did the Chinese Federal Reserve do? They go, dang, 50 basis point interest rate cut. The other thing, and the chart on the right, if you guys can see this on your small screens, if you're watching on a cell phone, take a screenshot or go to the Kobesi letter. This is on their Twitter handle. China currently is facing the longest period of deflation. Now, you guys need to add this word to your vocabulary, because like Japan. Japan was in a deflationary cycle for 20 years. They literally had negative interest rates to get themselves out of deflation. If you ask me, which one is worse, inflation or deflation, which is the complete opposite of inflation, deflation is much worse. You don't want to even go near deflation. If you go near deflation, every single asset price will be collapsing. So you don't want deflation. You want some inflation, like oil, in an engine, but you don't want like too much of it, like we did last 3-4 years. Although the government gaslights us and says, it's just 2%. I go hogwash, hocus pocus to that. It's not 2%. But not even 2008 came with 5 straight quarters of deflation as we are seeing now. Okay. On that chart, there are black bars that are going above the zero line, and there are light blue lines that are going below the zero blue line. So that's when the lines below the zero line in blue are deflationary periods. So most economies would like to have inflation controlled to a certain point, but not deflation. Deflation is absolutely killer. Okay, I take inflation over deflation anytime. And so after a period of 5-6 blue bars, and they brought themselves out, that was in 1998. Then you had a short period in 2009, and we know that's the GFC, right? The whole globe was about to collapse. And then what happened? They cut the rates, they flooded the markets with cash, they printed money, whichever Federal Reserve could print, and then they just pumped it into the economy, saved the banks. Remember, too big to save, all that stuff, which they shouldn't have done, but they do. They have to, because otherwise the whole global, economy would collapse, because we're so intertwined now. We don't have what we had 30 years ago, that everybody's an island on their own. We all depend on each other. And then now, that's the warning sign the Chinese Federal Reserve saw and cut the rates really, really aggressively. I don't think anybody expected it, actually. And what did that do? That pushed all the Asian markets higher to all-time highs. Again, all this is happening. All this negative stuff is out there. But now the markets, because 6-8 months ahead, they're all making new all-time highs, saying that all these rate cuts are going to help actually in the future. I'm just not seeing that yet. But, if you guys join me in the future, I will keep you posted, obviously. And now we have 5 quarters of blue line, which is deflationary periods, under the zero line. So that's what the Chinese government's saying. That's what they're panicking, and they're going like, okay, we need to cut rates. This is not good. We don't want to not only kill our economy, but we also don't want to drag the global economy into a global recession. So we'll find out. A lot of this is open-ended, because I want to create this conversation, and I want you guys to create this conversation. And there'll be people who take one side, there'll be people on the other side, but it's good, not debate. It's a good conversation. It's a good discussion that we need to have. And the last one talks about China. Deflation, the definition of deflation. Deflation is the exact opposite of inflation. It's when prices fall. When prices fall on everything. Literally, whatever you're buying on the street, your food, your cell phone bill, everything falls. And that includes your investments, which is the market, right? So while this may seem welcome, the economic impact is detrimental. I agree. If prices are falling tomorrow, why would you buy today? So what happens is that creates this domino effect. If tomatoes are going to be cheaper price tomorrow, why would you buy tomatoes today? So it kills demand completely, right? If a piece of real estate you're going to buy next month is going to be cheaper, why would you buy it today? So it absolutely decimates demand. And to get out of deflation is much, 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 much harder than to kill inflation. So the result is an economy that is effectively frozen. I completely agree with this. So I'm not saying that's happening here. It's happening. It looks like the Federal Reserve of China is thinking that's happening. So, the next topic I'm going to talk about is my favorite topic. Who holds the U.S. Treasury securities? We all want to know. There's $35.3 trillion in Treasury debt. going up 100, or going up every 100 days, $1 trillion. Who holds this stuff? Like, I know I probably do in my money market fund, some of it on short-term T-bills or whatever, but who holds this stuff? This is a lot of cash. $35.3 trillion, not cash, IOUs. So let's look at the red line. That's what's happening to our national debt. You guys notice it doesn't matter who's in the White House and when. This goes back to 2018. But if you go back, forever, this started in the 70s. And it's when we got rid of the gold standard, and then that's how we tried to grow the economy, because before we couldn't print money because everything was, the US dollar was tied up to the value of gold. So whatever we had gold in the vault, that's how much money could be in circulation. Well, we said, you know what? We need to grow economy leaps and bounds above this 2% GDP. We need to get rid of gold, have a floating dollar policy. And then here comes the printing machines. And then it worked for a while. Now, chickens, or what do you call it? They're coming to roost, or chickens are coming home, or whatever. I'm an immigrant, so my English is okay, but not as great as you all probably. So here it is. So when we did that, what are we doing? We're just pumping, putting into the economy, putting into money supply, putting into M2. And we grew our GDP to a total of $27 trillion. Last year's GDP is 27 trillion, while our debt is 35 trillion. So, cats is out of the bag. I mean, and we're going up a trillion every 100 days. So in probably less than 100 days now, if I come back in like 2 months, this should be 36 trillion. And another 100 days later, when I come back, I'll go to this. We're at 37 trillion now, with no relief in sight. As you guys can see, the angle of this thing is 45 degrees from the lower left to the upper right. It's going to keep doing this. Now, the other thing is going to happen is it's going to keep accelerating, actually, because the servicing of this debt that I talked about is also $1 trillion now, or over, every year. But I just wanted to make you guys understand who's holding all this stuff, like who's holding the gun to our head. So it may not be as bad as you guys think, because like China and Japan, they were the two largest debt holders of ours, with 1.7 trillion and 1.2 trillion. They've been actually cutting it. China's under $1 trillion now. They're selling all their U.S. securities in T-notes, T-bills, T-bonds. The definition, you guys can Google that. T-notes are shorter maturity, T-bonds are longer maturity. So who holds all these U.S. Treasury securities? Update on the investors in the ballooning U.S. national debt. As the Fed is unloading them, others are loading up. They must see something, right? Well, they see a return, right? I mean, if you were to buy a T-bill today, although with the lower rates, I think we're still about 4.5%, which is okay, I guess. But if the inflation, government says inflation is running 2%, interest rates are 4.5%, net return, right, of 2.5%. Hocus pocus, not true. Inflation in the country, actually, for the last God knows how long, has been running at 6 to 7%. Not 67, 6 to 7%. Even if you get to 4.5%, actually you're in the bag. I mean, you're in the negative on a nominal basis, okay? Because it's not 2%. Let's just be honest. So U.S. national debt has ballooned so fast to 35.2 trillion by 12 trillion since January of 2020. Okay, it's not politics. Okay, we know Biden took over in 2020, correct? Now, not that, and before then it was Trump. You guys can see 2018 to 2020, it's not a pretty picture either. So this is not political. Whoever's in the White House loves to spend money. And the Washington, D.C. politicians, the state, the House and the Senate. So I'm like, we added 4 trillion to the deficit since Biden took over? Of course we did. We're sending billions, hundreds of billions to Ukraine. It's political. Let's not get into the politics. So 20, that's mind-boggling. I agree, especially in a growing economy. Yeah, because what's happening is that now every dollar we're borrowing to pump up the GDP, the ROI on that dollar is so low now. It used to be like 1 to 4. So if we borrowed $1, we could get a return of 4x. Now it's like 56 cents. So we're in a negative, like we're borrowing money to just grow the GDP, 56 cents on each dollar we borrow. I wouldn't borrow money if my return was not at least 1-to-1, if not more, right? I mean, it doesn't make sense to me, but who am I? And every single one of the treasury securities that formed this colossal debt was bought and is held by some investor. Correct. And we're going to look at those entities that hold this treasury debt. Okay, let's look at it. Who holds the 27.05 trillion in marketable securities? Okay. The Securities Industry and Financial Markets Association just released its quarterly fixed income report in Q2, which spells out, among other things, who held these 27 trillion in marketable treasury securities at the end of Q2. Foreign holders at 33.5% of marketable securities. You guys can Google this. There is actually a pie chart on Google that includes every single country around the globe, from China, Japan, Russia, UK, and France, and everybody. And you guys will see the pie chart. 33.5% of marketable securities is held by foreign holders. That could be hedge funds. That could be anything. It doesn't have to be sovereign investment funds or governments. And 66% is held by U.S. entities that hold the remaining 66.5%. So 66.5 plus 33.5 is 100. So here we go. So that means foreigners own 33.5%. 66.5% is owned by the U.S. entities, right? Who are these U.S. entities? You guys are going to say, well, part of it is the Federal Reserve, because that's how they create money coming in and out of the economy, and like money supply, M2. So the 66.5% includes pension plans. The 66.5% may include if you're a teacher, the teacher's pension plans. It includes hedge funds. It includes companies. I mean, if you look at companies like Apple and Google and Meta, they hold billions, hundreds of billions. Or Warren Buffett, 270 billion in T-bills he owns, right? In short term, collecting 4%. So I think he owns more T-bills than the Fed. So it's the U.S., right? It's the U.S. entities such as pension plans, government entities, individuals, right? Because you can actually do this yourself. You can go to the treasury.gov, but you have to have a minimum of $25,000 to start. Or you can open a brokerage account like at Schwab and go buy T-bills, just like everybody else is doing. So there you go. 33.5% is held by foreigners, and 66.5% is held by the U.S. And these are from short-term T-bills. T-bills go weekly, monthly, right? And then you get into the T-notes, which is up to 2 years. Those are T-notes, meaning treasury notes. And then everything above 2 years, up to 10 years, is called T-notes. But then, and when you hear T-bonds, then bonds are much longer maturity. So when you do buy one of these at a T-bill at 4.5%, in 30 days, that's going to mature, and you're going to give you your money back, including interest, that 4.5%, and then you're going to go do it again. You're going to buy them again. It doesn't cost anything to do this. You just have to have enough money to do it, and that's where the money is at. So now you guys know who holds the bag. What? No. Bag holding is a bad thing. It's not a bag. It's just holding bonds, and that's why you got to watch the macro, because interest rates fluctuate on these things as well. Because when these mature, the Treasury, issues new debt every single day in billions and billions of dollars, because whatever they issued maybe a month ago or 2 years ago is expiring today or maturing today. So they have to issue new ones to replace. And when they had the zero interest rate policy, everything was fine, right? The interest rate expense on the servicing of the debt was very minimal. But when they raised the rates from 0 to 5, right? The servicing of this debt, 35 trillion, is out of control now. It's over 1.2 trillion just the interest that we pay on these IOUs. So you guys have to think of the bigger picture as well. So the next topic I'm going to talk about is something that I subscribe to wholeheartedly. So we're going to go with, what are the signs of market tops and market bottoms? Okay. These are not exact, but if there's 12 or 13 things in here on each camp, top signs or bottom signs. When you see 8 or 10 of these come together, watch out. It could be watch out on a good way. The market could be bottoming. So I'm going to go real fast through these. Okay. Top signs. Large or no IPOs. Large number of IPOs. Not really. Not too many IPOs are actually happening. So that's not valid as a top sign at the moment. Rapidly rising prices. That's definitely valid. We're making an all-time high. I think we made our 42nd all-time high this year. Excess leverage. Unquestionably, well, look at the government, 35.3 trillion, right? And excess leverage in every possible way. Credit card debt in the public sector, corporate debt through the roof. I mean, we don't have to go into that. Excess leverage for sure. Availability of credit, now not as much, because when the rates went from 0 to 5, I mean, borrowing costs have become prohibitive, but the availability is still there because the Fed constantly pumps money into the system. Number 5, over-optimistic front covers of newspapers and magazines. Yeah, to a point. I mean, actually, yes and no. That's probably 50-50, because I am seeing some, okay, so your best bet is going to be when Kramer says on CNBC, stocks only go up, buy anything and everything. And then that's definitely the top. So that is your best contrary indicator. Very high trading volumes, meaning capitulation to the upside. That's not there, because actually on this rise to new all-time highs on a daily basis, the volume has been pretty anemic. Historically high PE, EV, EBITDA multiples, 100% correct. Market selling at 21 times PE ratio of next year's earnings. Well, if we do go into a recession, earnings collapse. I mean, earnings are not going to go up. Historical average is about 16, 17 max. We're at 21. Although interest rates do have something to do with that as well. But definitely we're in a high PE. Art and luxury markets are booming, without a question. I do follow this as a macro indicator. Every one of these things is making new highs. Baseball cards are fetching $3, $4, $5 million. So that's definitely a small part, but it is. Financial press and financial TV become favorites. Yeah, CNBC, obviously, and Bloomberg, whatever. This definitely is what I've been talking about today. This time is different. I hear that quite a bit, because the people who say that, by the way, have no history concept. Have been only around last 10 years when the market's just done nothing but go up. So this definitely is valid. Amateur investors move to equity asset class. Yes. With the democratization of the stock markets, with the Robinhoods and Coinbase and phones in our hands, swinging options. Yes, for sure. Amateur investors move equity asset class. Innovation leads to euphoria. Well, AI, right? There's an AI euphoria going on. We know that. And social proof leads to herding. So out of these 13, I would say 7 or 8 are valid. The bottom signs, no mergers or acquisitions. That's what happens in the bottom. So when we do get there, watch out for these, because now, unless you guys think we're at a bottom now and we're just going to keep going higher, then this is your box. My box, I'm paying attention to the one on the left. If you want paying attention to the one on the right, that means you're disagreeing with me, and then everything is going to keep going. No mergers or acquisitions. That's actually iffy. No IPOs. No, that's not true. So no new money from venture capital. It got kind of squeezed because of high interest rates, but I think it's still flowing. Low price sales EV. No, I mean, that's not true. Price to sales ratios are astronomical at the moment, and PE ratios as well. Many companies trading below book value. Definitely not true. Everything is selling ridiculously. Very PE multiple, low PE multiple. Absolutely not true. Central banks ease for 6 to 12 months. We just started. Pay attention. We just started, right? So the bottom will come after they ease 6 to 12 months. That means there has to be a fall for the bottom to happen. Unless it's here, it's going to go sideways. Central banks are going to cut around the globe, and we're going to go sideways for a year, and then we're just going to break out. Possible, but then market will tell me that anyway. Recession declared officially? No, because the recession will be declared 6-8 months from now, but by then we'll be coming out of the recession. The market will already have turned way before the recession ends. Previously favored sectors hated, like, for example, the Max 7 will be hated. Absolutely not. Max 7 is still loved. Credit only available to high quality borrowers. Not true. You can have garbage credit and still borrow money today. Negative front covers of newspapers. Definitely not true. Negative and depressed consumer sentiment. Now, that is kind of happening with the first topic I discussed about. So maybe 3 or 4 things are here. So if you look at both camps, there are more things valid or factual on the left box than the right box. So I'm saying this is not a bottom. So this is about topic about tops or bottoms. This is not a bottom. We'll see. We'll see what happens in 6 to 8 months period. Next topic I'm going to talk about is Wall Street and their expectations. So as you all know, on Wall Street, market moves on expectations. Earnings, like Micron's earnings, I talked about it Wednesday, came out yesterday, stock blew up, right? Everything is about expectations. And analyst community will set up an expectation, and then stock will either beat it or not beat it. And when you don't get beat, they take you behind the shed and shoot you. But if you do beat it, everybody piles in, and then that's what happened to Micron. Went up, I don't know, like 15, 18% yesterday. So, but right now, I agree with this. Markets now see 80% chance of soft landing. Absolutely. Markets pricing in a perfect situation. We're at an all-time high. Fed's starting to ease or cut rates. So the chances of a recession is not being negated, but it's less and less. I don't think it is. I think Fed is way behind the curve. They were way behind the curve raising the rates to fight inflation, and they're way behind the curve now. Markets see 80% chance of soft landing, so markets pricing in a soft landing. For a 3-week period, you guys figured out when the Japanese carry trade debacle took place, how market prices, right? So, I mean, triple Qs or went down 15%, S&P went down 11% in a matter of 3 weeks. That's a lot. So that's what happens. But we're right back to where they were or higher. So markets pricing in definitely a soft landing since 1980. Here it comes. So you don't have to go Google it. Since 1980, the Fed has only seen one, and that was a half-ass one soft landing, and it was described as one of the Fed's proudest accomplishments. Okay, cool. One in the last 44 years. How many recessions we had? Right? 5. Okay. Only 17% of rate cut cycles have ended in soft landing. Remember the Fed pivot? I did a video about it. We talked about it. These things don't work. People can't time this. Markets are just too big. Can the Fed really pull it off now? Well, we're going to find out, won't we? Because if I'm still alive and doing these things and talking to you all, we're going to find out, right? Time will tell. And here it is. And this is the fund managers. These are the people that manage trillions of billions of trillions of dollars, right? Wealth managers. Currently, so there is a thing called as a contrary indicator. Who's the best contrary indicator trader? Warren Buffett, right? What did he say? He goes, when there's blood in the streets, I buy. I'm like, okay, cool. And so I will explain to you guys this. What my mentor said one day when I first started, he said, okay, listen, you have 100 people in a room. Okay. I go, okay. So 90 people have bought that stock already. I go, okay. He goes, well, what difference would it make if 10 more people buy it? I go, but what if those 10 are all whales? I go, right? They're the ones with trillions of dollars. He goes, yeah, but okay, so let that happen. And that will end as well, right? And I'm going like, yeah. So he goes, think about this. If everybody is saying the same thing, the chances of that happening is pretty low. So currently 79% of fund managers surveyed by Bank of America see a soft landing as well. Great. This compares to just 11% of managers expecting a hard landing. So 11% of managers are kind of bearish and 80% are almost bullish. They go, everything is going to be fine. Everything is fine. It's different this time. In other words, a soft landing is effectively already priced in to the market. I completely agree. Even as uncertainty is rising. Absolutely true. So on powers to be managing trillions of dollars are expecting a soft landing. If they see the signs of soft landing cracking, that's when the elevator will take its express route down. But time will tell. No rush in trading. Markets open every day. The three P's: patience, position, and planning. We'll just look at these things. We digest it. Every day we come back and there's something going on. And the last topic today, before I answer the comments and questions, is going to be again, warnings. 2000 crash signs are everywhere. How to protect your gains and preserve your capital. And this is short topic. I've been talking about the whole hour about this without getting too boring. Here's a chart. So most of you may have heard this thing called an inverted yield curve. What inverted yield curve means is that short-term rates go above long-term rates, meaning a treasury bill or a 2-year note, in this case, in the yield curve, is looked at if that goes above a 30-year bond rate, which had happened for a while now. Actually, this was the longest period that we had an inverted yield curve. And inverted yield curves are always signs of a recession. Not always, but most of the time, right? So we had a 2-year note that was way above the 30-year bond, inverted yield curve. Okay. The percentages of U.S. yield curves that are inverted is down from 92 to 67, marking the sharpest decrease in 2000 since 2020. In the past, whenever this percentage rose above 70 and subsequently started dropping, the U.S. economy fell into a recession. Here's another warning sign. Look at that chart on the right-hand side. See all these little circles? Those are all the peaks of inverted yield curves. And now we peaked, and now we're coming down. Why? Because the Fed cut the rates by 50 basis points, and they're going to keep cutting. So inversion has ended, right? So now we're in a neutral or a positive yield curve. But they are doing that for a reason, right? And every time we had a long period of inverted yield curve, we ended up with a recession. On the chart on the left-hand side, these are every going back to, I think this goes to 1980, 44 years. So there's a chart, again, by the Kabesi letter, thumbs up to them. Here's a chart showing every major U.S. recession since 1980. The mid-1990s were the only time that the Fed was able to achieve a soft landing, right? That was that one right there, the one highlighted with a green box around it. So, and on the bottom, you guys can see the interest rates, right? See that period of flatness? That was ZIRP, zero interest rate policy. And then we raised the rates, and then we went back to zero interest rate policy. We went twice to ZIRP. One was the great financial crisis, which the ZIRP lasted 15 years. Then we raised the rates. Then we came down, and then during the pandemic, we went to ZIRP again. ZIRP is zero interest rate policy. So when I say these acronyms, I think you all know it, but then I have to remind myself that maybe they don't. And now we're cutting rates again. So that's called the Fed pivot. Do you guys see the interest rates? What's happening there? So when the Fed pivot happens, it happens because we're going in a recession. And 5 out of the last 6 times we've pivoted, Fed could not manage a soft landing. So maybe this time is different. And I'm going to end with that. And this soft landing came at a time in the 90s where there was not a persistent yield curve inversion, where we talk about it. I know this is becoming a little technical, but just indulge me because I love this stuff. So this is what's happening. We had an inverted yield curve for literally like a year and a half, maybe more. Okay. Every time we had that prolonged inverted yield curve, and then we went to a positive yield curve, definitely recession took place. So I'm going to end it today. Hope you guys enjoyed it. Now we're going to go into the comments. A lot of comments today. So let's go through the comments first, and I'll go to my screen. And some of the positions are doing well. Hopefully they're still doing well. Ooh, look at these questions. Okay, good morning. Good morning, everyone. Good morning, Techie B, Craig. 10. I don't know. I'm putting comments. No, that's Chris. I'm fool. Mojotronics is here. Okay, become a member. The membership will pay for itself with the knowledge. Yes, I agree 100%. And the first members only live stream, October 4th, coming up. So get your membership and then join me on that live stream. That's going to be members only. Craig, hopefully by reading the books, I will be able to get longevity. Yeah, I sure heck hope so. Okay, so here we go. John says this time is different. Let's get rid of this. Let's put this here. All right, so John says, what stocks are you shorting? Okay, well, so when you say this time is different, and the next comment you say what stocks you're shorting, that means you don't think it's this time is different. I don't know. Why is it this different this time? So maybe you grab a membership. Come ask me that question. Okay. Oh, my Armenian buddy is here. Haikakan crypto dropouts. Deprops? Okay. Sergio, have you come across The Great Taking by David Webb? No, I have not. Thanks for the recommendation. That's Chris. Go Bills. Of course, I'm a Bills fan now. Rich says, can you have Chris enable transcript? Chris, are you here? Are you listening? People are asking. Enable transcript of the show, you mean? I don't know. WeZoom is here. Smash the like. Absolutely. Please smash the like button. It helps supposedly. How's the hurricane? Is it happening there? I'm not sure. Good morning from the Bayou and Land Cajun. Who dat nation? Who dat? I agree. Go Tigers. Smash the like. I agree with Tiger Mag. Mojotronic says, this is a good one. Good one. Really appreciate your heartfelt advice. Still a deer in the headlight. Hey man, it's okay. You know how many people are deer in headlights for like years? And they never get out of it. I've been struggling. Everything is as high as a giraffe's rear end. Absolutely. You're talking about inflation, right? Heck yeah. Gaslight. Government keeps gaslighting. It's all good. We've been in a recession for some time. Okay, this was about the recession. Okay, but it's an unusual one. I'm shocked. It's not. Well, hold your horses, Fred. We're about to get to the deep end of the pool. I have a feeling. For Q&A later, okay. How do you plan to play lunar options? Well, you came to the right place. I own them, right? Over 50% in less than a day. Absolutely. We don't care about earnings, bro. That's not an earning stock. Well, I will share the position, what I'm doing with it. Hopefully it's still hanging in there. I don't know. Yeah, they were up 50%, but I don't know where they are. But that's why I bought November. I'm gonna hold on. That's why exactly. We Zoom. See, it's not that difficult. We Zoom. Which one? Okay. For some of you who've been here 3 months, what stock was I saying I'm buying? I own it. What was it? Alibaba, mid-70s. Where is it? 100. Have a good one. Will I sell? No. But I am selling covered calls. I talked about covered calls last week. So Richie, remember, hey Richie, so you're quasi-bearish does not mean more put protection in you. No, absolutely not. But I did add some more puts today because I'm trying to, as I said, this is not about position-to-position deal. Equity, we're trading equity. If I have $1 today and if I have $1.10 tomorrow, I'm good. I don't care what the positions did inside the portfolio, right? We're trading equity. We're not doing anything else. Next one. What edge can a retail trader possibly have against a multi-million paid traders, for example, Citadel? Citadel is a high-frequency trader. They have nothing to do with you. Actually, it helps you because with the whooshes and the parabolic moves they create with their algos, you can buy at a better price and sell at a price than they do because they are 40% of the market. You're not them, and you're never going to be them, and you don't even want to think like them. So that's like, in context, no. What's the interest on T-bills right now? About 4.5%. Pretty good. CDs, same thing. Like if you go to like 1-year CD at a credit union, it's probably 4.5%. Are you making more money driving Uber? Shit, bro, come on. That's not even my livelihood depends on my investments and my trading. That's for fun, as it should be for most of you. That's just side hustle at best these days. Hey, Michelle from OC. Thank you, Michelle. Let's see, another member. There we go. We got one more. Oh, really? They brought to school? Okay, I didn't know. Sorry. I mean, my Armenian is decent, but not as good as you, Vic. All right, so I'm going to go share my screen. And let's see my positions. Let's see what's happening. Hopefully we're making some money. Well, we were before I came on. I was, not we were. I don't know what you guys are doing. You guys can see the screen? Yes, yes, yes. Let's go to the screen. All right, this is the 2-minute S&P 500. Not interested whatsoever. Okay, let's go to my positions. All right, so this is where everything I did today. You guys, well, let's go to the positions first. You guys remember the lottery ticket? I still have that lottery ticket, but I may be coming to life. So I have Haynes. Okay, these are all my positions. I can't do more than what I'm doing here. I have 300 calls, October 18th expiration, $10 calls on Haynes Celestial. My cost is like a nickel. They're still at a nickel. I can't sell them though. They're probably going to expire worthless unless in the next 3 weeks stock moves up another 10%, and these will be like 20 cents. So still holding those. I bought these like almost like 3 weeks ago. Only spent like $1,600 buying 300 calls. I'm okay with it. Once in a while, I'll do this lotto ticket thing because I like the pattern, and I will show you guys the chart. Don't do this today. Don't. This definitely is a no. Don't do what I do. On some things, you should do what I do after you do your own due diligence, because it's not investment research. It's not investment advice, trading advice. Please. Okay. Okay. So what do I have? I added to the spider puts today. Now I'm long 15 of the October 18th expiration 565 puts with an average cost of 472. They are about 4 now, so I'm down about $771 in that position. Okay. All right. That's kind of a hedge with all the about 120 calls options I'm holding on other stuff. So, but if you guys can remember, I had sold because I was 12 and 12. I was long 12, short 12. I had sold expiring today 12 calls of the September 555 puts against my long position at 21.25 cents. They're going to expire worthless, obviously, because the index is nowhere near 555. So in that one, I'm taking in a gain of about 250. So overall in the S&P position, about 775 loss in the long puts. I will add to the puts as my long exposure grows. Again, I'm going to show you guys at the end what the equity trading looks like, right? So if I had just this position, I'd be down $500 on this position. So I'm down 770 on one, up 250 on one. I don't know, $500 loss overall. No big deal. And the next one is I started buying NVIDIA calls today just to balance my short exposure a little bit more. Nothing major. I bought 4 options with an average cost of 417. They're 350. I will add, these are the October 18th expiration, $125 call. Stock went to 127. Now it's down to about 120 and change. Decent pullback, low volume. I get it. No problem. I will add to these when I see fit. So on this position, I'm down $132.41. Now, Lunar, let's look. I told you guys this on Wednesday. I bought 30. I wanted to buy more the next day. When the stock was down, the market maker wouldn't give it to me. And I said I wanted to buy more. These are the November $9 calls. Okay, stock is 870. It got up almost to 9. Now it's at 870 because the market kind of sold off a little bit. So I sold actually at the peak, almost at the peak, 5. So I like scaling in, I like scaling out. So I sold 5, as you guys can see here, 5 lunars at, I have orders standing. So, okay, filled orders. I sold 5 at $1.50. So my average cost on these were, or are still, $1. So I sold 5 at 150. That's a 50% gain. I'm still holding 25. They're November 15th expiration, $9 call options that I bought. So I'm going to, on this little pullback, intraday pullback probably, I will add to the 10s now. I will, because now that my strike is coming closer, no need to add to those. open a new position to the 10s. I'll look at the 10s in a minute. If they're worth it, I'll start scaling in. And the last position I have is Sleep Number. I told you guys about this. So I bought 50 calls with an average cost of 95 cents. Wednesday, actually. Those calls right now are 150. So position up 50%, except I have only 40. I like scaling in, scaling out. So this morning when the stock was above 18, I sold 10 of those at $1.70, which is right up here. I'm highlighting it. Right up here, SNBR 6 and 4. I sold 10 of them at 170. So I took some profit. Always a good thing to take profit. So the profit that I took on Sleep Number was 700. Okay, the profit I took on Lunar was 125. I opened some new positions, and then now I'm going to show you guys the overall equity trading, right? And this is the bottom line. This is the bottom line. This is my P&L for the day, right? And it's constantly changing, obviously. So I still have the Hain. I still have the loss on Hain because they're priced at a nickel. I still have the loss on the S&P 500, Lunar gain, and Sleep Number gain. This is my P&L for the day. Okay. Accounts up $3,930 and whatever, 26 cents or whatever. And on the open positions now, because there is losses, right, on Hain, and there is losses in NVIDIA, and there is losses in the S&P 500 at the moment, right? So on the open positions, the totals are 1,540, 1,556 is changing every second. So meaning, at the moment, if I closed everything up, everything, at the current market prices, my equity would be up 1,500. This is the total P&L, this is the daily P&L, right? So you have these tools. So my account, is up. What will I do? Well, I will hold on to Sleep Number. Now, I will show you guys, I have sell orders in Sleep Number scaling out. I have 10 options to sell at 160. I sold 10 at 170. I have 10 options to sell at 180, 10 at 190, 10 at 2. You guys see how I'm scaling in, scaling out? Because I don't know where the top is going to be of a stock. But my anticipation is that if this is for the day, by the way, this is not open order. So if it doesn't happen, all these orders get canceled, and then I'll play again. I'll decide again what to do on Monday. But if it happens, if Sleep Number, gets to about 18.5, all these will be sold and then scale out, and with an average cost about 180. So I had 50 of them with a cost of 95 cents. Well, that's 85 cents times 50 is like $4,200, right? I'm going to take that profit for sure. And same thing, I have sell orders above, small ones, 5 lots at a time. Actually have only 5 at $1.60 on Lunar, right? November's, my cost is $1. I'll take $1.60, keep 20 over now, but I'm going to start opening the $10 strike call, same November 10th, probably while we're doing it here. NVIDIA, we'll see. It's like a little bit of a hedge on my short position. I will definitely sell now against my long puts. I will sell next Friday's puts. Again, the 555 is probably taking another 30 cents, 25 to 30 cents. So this week, my cost has actually been lowered by doing this strategy, right? I sold the short-term puts against my long-term long puts and lowered my cost by 21 cents. Next week, I'll sell them again for next Friday. And if the S&P drops to 555, then what? Those long puts that are for now, 402, 404, right? My cost is 472, are going to be probably a 12, right? But by then, I would have rotated and liquidated out of the Sleep Number and out of Lunar, because when the market goes down, everything goes down, and I probably will take a loss. But then the numbers, look at the numbers, right? I'm trying to have enough balance that, yes, we could get a sell-off. So I'm protected against the sell-off. So all the long calls I have is much longer dated, November's as opposed to October's, right? So they're not going to hit the wall again. Even if we do have a sell-off, I have a chance to come back again. So you guys understand my mindset, right? How I'm playing, the time, the duration, and magnitude of what I'm doing. And I'm still 80% in cash, right? And I'm always open to new ideas. So I'm going to go back to the main screen. Actually, not main screen. Go to the charts and go through my chart list. Let's see. And then I'll answer all the questions and then we'll end it today. If you guys are going to come back on Monday, which I highly recommend for trading with Sergio, I have like a ridiculously important meeting, Zoom call at 9:30. It's supposed to last half hour, but they never last. So just for this Monday, I'm moving trading with Sergio to 11 a.m. Pacific, 2 p.m. Eastern, because I'm anticipating that this call is going to go longer. So let's go to the charts. And let's go through the MAX 7 and the usual watch list. This is the 2-minute chart of the S&P, still basically sideways. Let's look at the daily, 1 year, 1 day. New highs. I mean, I don't know. What do you want me to say? Just it's there. But when it happens, it will happen. But I'm kind of positioned for it. And my exposure is really 20% of my total equity. So I'm not worried whatsoever. But then I have protected kind of myself with the open positions I have. And the other thing is the stocks I have with the market down today a little bit, nothing major, are outperforming, right? So let's go through my watch list and then I'll answer questions and then we'll finish today's power hour. Here we go. All right, I'm just going to go through the MAX 7 first, Apple. So as you guys can see, the positions are here. 15 long of the October 18th, 565 puts, and short 12, which are expiring today, which I'm going to roll to next week's and sell more and lower my costs some more, and hope that we do get a crack to 555, because then, the 565 will be completely in the money, and they'll be like $12 minimum. If they're 10 in the money, it'll be a couple of dollars in time premium probably. Let's go Apple. Apple's still going sideways, depends, right? Above the 20, above the 50, above the 200, nothing wrong with it. It looks pretty good, actually. We'll see. But my targets with Apple is going to be like all high right here. If it goes above 233, definitely new highs coming up. If it goes below, this is the pivot right here. If it goes below the 20 EMA, actually about 224, definitely going lower. Meta probably making new highs. What a winner this stock has been. Yeah, just all-time new high almost every day. Amazon, and rolling over a little bit, nothing, just pulling back to, if you're going to buy the dip, this is the dip that you're waiting for, right? If it dips down to 182, you should be a buyer with a tight stop. Really nothing major. Microsoft, same thing, just kind of digesting the gains. Netflix, same. These are, the worst one is Google. Google is the worst out of the MAX 7. Nvidia, in its coattails, it's pulling back a little bit, but, found kind of visited resistance, really nothing major. But above the 20, above the 50, watch it. Although if it does dip, if it does get below, right, this number right here, about 113, definitely going. I'll be going short, because that's the support area right there. Still going sideways. Look, there is nothing wrong with this chart. It had a massive uptrend. It just got really volatile. I'm telling you, it looks just like this period right here with a much wider range. I don't know. It's not bearish, man. If anybody's bearish on Nvidia, I don't know. So let's go through my absolute new watch list. I had a couple of small names, honestly. I don't know why. But then you guys will see. Affirm, same thing. Pulling back onto the 20-day. Look, I traded this, and I told you guys, again, not trading or investment advice. MACD has turned down. I'm really getting cautious on these names that I really liked. I will not buy this pullback on a firm, although I will buy it if it pulled back to the 50 EMA, which is about 36.72, 37. Patience, patience, patience. It could be in a trading range before it makes new highs. So, if it's going to be in a 36 to 46 trading range, I'll take it all day long. I added Albemarle. Why I added Albemarle? Albemarle is ALB is the symbol. It fits my criteria, not technically anyway. This is a lithium stock. And I was listening to Elon yesterday. He said, if you're an investor, buy lithium stocks. I'm like, let me look at a basket of lithium stocks. I don't own it. ALB is the symbol. Let's look at the long run. It's just downtrend, man. I don't see much here. But then it's always good to add. And just like Baba was in a downtrend forever. And then, when things turn, you got to be on it. So add it to your watch list, ALB. Oh my God. What the heck? This was a $300 number? Wow. Okay, definitely add it to your watch list. I mean, still massive downtrend. Under is 20. Above it's just 50 and 20. But yeah, just add it. It's they're much better charts than this. But let's listen to Elon. Doesn't mean he's right. He said lithium, so I went and figured out a whole bunch of lithium stocks. I'm like, okay, if Elon says so, let me take a look. I didn't go jump on it because it's Elon. So you guys know, do your due diligence. So it's one of the new ones. AMD, obviously. Did well with Microns. Yeah, broke out. Definite buy on pullbacks. 161, 162, 160, or anywhere above the 20 EMA, about 158. Definitely buy point. Patience. ASTS, I missed it by absolutely a nickel on the October 18th calls today. When the stock was 19, calls were $120. Now they are 250, 60-ish or more. I'm kicking myself. I'm putting a key reversal day in. Although, it's under its 20, under its 50. MACD is going down. I was like, do I really want to mess with it before the weekend? But of course, the ones that you don't do are the best ones. Avago. But then I don't kill myself. I forget about it. Short-term memory. Avago, definitely buy on a pullback. 165. Be all over it. It's my favorite. Making me so much money on my long-term portfolio is Alibaba. How you guys like them apples? It's gone parabolic now. That's why I'm selling the 110 calls, October 110s against my position. Even if it pulls back to 100, which it will, or 95, whatever. Yeah, I'm going to eat $10, but then I'm taking in some premium, so lower my cost basis. Beautiful chart. When I told you guys this 3 months ago when I first started the channel, a lot of people were like, it's a Chinese stock, blah, blah, blah. And by the way, Alibaba has a long way to go. Alibaba was like a $200 number. It got down to 70s. And, remember those patterns I talked to you guys about? Cup and handles, long-term bases, breakouts. Well, it was there. So don't say I didn't say so. Love that. Technically in every which way. Okay. That's Alibaba. Billy. Talked about it before and also on Wednesday. Another Chinese stock. What I do is I start rotating and I start paying more attention to different stocks when I see it fit. So, I'll put up some Chinese names. Look at that one. Gone parabolic. This was a much higher number too. It kind of went sideways, sideways, sideways. This is exactly what fits my setup, right? Sideways, 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 breakout. You jump on it. Baidu. There's Baidu. It's just getting going. Just went above the 200. So any pullback on these, on Baba, Baidu, Billy, please put it on your watch list. Look at your moving averages. It's way too far now, but let's look at a 3-year chart on Baidu. Yeah, I mean, it was a $160 number, got down to 80, down 50%, now breaking out. Yes, sir. Buy on pullback. See, these are the ones that you want to buy on dips, not NVIDIAs and things like that. So you got to rotate. So you got to rotate when they give you a chance to rotate. And so if Baidu pulls back to 100, I start initiating positions. Billy, BILI, just kind of the eyeballing the buy points. 18, anywhere around 18. Stock is 23, so we're asking for a big pullback, but they will pull back. Don't worry. Same thing on Baba. Baba, yeah, 100, maybe 95 to 100. Start getting in. Now we'll go sideways. You know what I mean? And then next leg up will show up. So 10 cent is 10 cent is TME, I think, but I'm not interested in that one. So anyway, that's the Chinese group that I'm looking at. Bitcoin definitely breaking out. BITX, double Bitcoin. We talked about that. Kind of, still in a downtrend, still in that channel. But as you guys know, I talk quite a bit about MicroStrategy. Testing the highs. If I had it, I'd sell it. Hit 180 today. It's already 173 in a trading range. But Michael Saylor is turning out to be right. Kava, very cautious on Kava now. Actually, I lightened up some more today on my long-term portfolio. MACD, definite bearish divergence. I don't like it. I think it'll pull back to 109, 110, maybe not, maybe lower, maybe to 100. I'll pay attention there. I'm lightening up on this portfolio and I'm rotating to the other ones, right? Because you guys always have to rotate, see what's happening. Let's see. CLSK, I know Mojotronics is going to ask that, but I don't know, man. It's not getting any help, although it's $10. I think it was 9 before. Carvana, right? Definitely very cautious with Carvana. I mean, it's better than Kava, but so remember First Solar, right? See, same stocks, but then like he keeps grinding up. The breakout was about 238. Hit about 260 today, 263. Now it's turning, putting actually a key reversal day, but above it's 50, above it's 200, above it's 20. Pullbacks to about 240, 245 should be looked into. Goldman Sachs. I added a couple of financials to my rotation today. Goldman Sachs and JP Morgan. Goldman Sachs was up a lot more. Kind of going sideways. I mean, it looks like the IWM, which is Russell 2000, which I'll look at in a minute. And JP Morgan. Those are the two financials. Actually, Goldman looks better than JP Morgan. Robinhood. One little trading thing. Top of the range. Everything is pretty much that I'm looking at the top of the range or just getting going, right? IWM, Russell 2000, top of the range, right? So you guys got to pay attention to these things. So let's look at Lunar. We talked about this Monday and Wednesday. Don't say I didn't say so. That's Lunar right there. Consolidated, turning up, decent volume. MACD's up. I have a sell order of 5 lots at 160. I sold 5 at 150. I'm going to rotate to the 10s now. I think a little bit more sideways in the breakout. Definitely going to test about 12, 13. There's a catalyst here. They got a $4 billion NASA contract. I think stock's done going down. Lumen was the other one. LUMN. We talked about it. I don't know. 4.5. I don't own it. And just be a watcher, really. Top of the range. Be careful with it. MicroStrategy I talked about. Micron. Earnings came out. Blew it out. Definite buyer. I mean, give me a chance now. That's the one you buy on dips. 102 down to 100. Definite buyer on Micron. Why didn't I buy before the earnings? I didn't know. It could have been down here. It could have been 70. So I don't want to risk anything. And the implied volatility was way too high for this play. Nvidia as well. I looked at it, but let's look at it again because I'm going to add a couple of more calls shortly. Yeah, before we leave, I'll probably add a couple of calls. The other ALB was the one lithium stock. PLL is Piedmont Lithium. It's an American lithium company. I looked at this one. I'm going like, this looks like death. I go, Elon, I don't know why you're smoking again, but I go like, I don't know, maybe he's way too early. I don't know. But this, I added it to my list, but I mean, no reason for me to do anything with this yet. But I added it to my list because I want to have a different visual and go back 3 years. Oh shit. This thing was $70. Huh. Downtrend of all, mother of all downtrends. Still in a downtrend. Stock kind of curling up. It was down as low as 7. Now it's at 9. Okay, add it to your, I mean, just going to go sideways probably in a trading range and then break out finally. When it breaks out, you guys will at least have an idea of what's happening. There was another rocket stock, and that's why I wanted to buy that. I added RKLB, Rocket Labs. Look at that. Huh? How beautiful is that? See, you guys got to find these. And then you guys got to tell me some. Look at that. This looks exactly like Lunar to me, just went up, new high, kind of consolidated, and then next leg. Now I wouldn't buy it, but now just go sideways. It seems like that's why I wanted to buy ASTS this morning, like a dumbass. My bias is negative. I'm like, it's Friday. Why do I even mess with it? I was going to buy the October 25 calls, buck 20. I put them actually at buck 15. They get to 115, 125. Of course, that's the low. And now they're like 2.5, double in a day. Oh, well, big deal. Little bug-eye robots is getting moving today. Back into the rotation. Serve Robotics. It went from, if you guys have been following me, it went from 2 to 24. I traded between 2 and 8, and then after I sold it, it went to 24. I sold it like with a quadruple, and I'm like crying the next week. Obviously, HFT algos got involved, and all this good stuff. Now it's kind of going sideways to curling up, back to the rotation. See, downtrends go downtrends. I'm going to show you one thing. Super microcomputers, right? See, I'm not going to show CELH because what's his name is here. WeZoom is here. Tesla, top of range. If I had it, I would not want it. I mean, maybe another 10 points in it, but it's definitely, I think it's going to be one of those buy on rumor, sell on fact, which is Robotaxi event coming up. A lot of people asking me, are you going? I'm like, I didn't get my invitation. We're trying our best, but we'll see. Unity software, I added it, as you guys know, because of massive option plays happening. I like it. Pull back to 20, definite buy. Okay. Upstart, another one. I mean, no man's land. Nowhere near what I want to do with it yet, but when it gets there, I know I'll do it. What else? Yeah. Oh, Zim. Remember Zim? Zim integrated shipping, new high. I bought. This one is another one. I bought the $20 calls, October 20s, a ton of it at 50 cents. Blew it out at buck 20, buck 10, with 100% gain. They would be like $6 today. But then, never cry over spilled milk. So I'm going to get back to the front screen, answer some more questions, and we're going to say goodbye. And boom, and boom, 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 boom. Okay, let's see. Let's go to this one. All right, so no questions? That's it? Okay. Seriously? Oh, Vic says Deep Routes is school. Okay. Here goes SPY puts. I didn't buy it to make money. I just bought it to hedge my portfolio. You will know when I buy them, Vic. Like my whole account will be put. Then you'll know. You know how much I'm pressing. I'm still 80% cash, maybe more, 83%, I think. So I don't look at it this the way you do. You're like day to day, what you can do, what you cannot do. Well, okay. I was watching right. Yeah, okay. Okay. Well, Look, you can look at it that way. Let me. No, I'm not going to spin it. Look, you're right, but let me give you a different perspective on this Mojotronics. Um, what you do with the other companies is not in your control. Okay, so there is a gentleman that I talked to quite a bit in Florida, about same age. He taught me two couple of things. He taught me. I'll put it up on the community guidelines. It's about 2,300. I'm up about 130. It was up to like 3,400. It's very difficult to trade that. I will definitely put up on the community. It's about 2,300. I'm up about 130. But I have to focus when times get really, really where I need to focus on my main trading account. I need to focus on that. I'm still up, but maybe by the end of the year it'll be $3,000. 200%, pretty good. Yeah. So you have two circles: circle of control, circle of influence. Right. The other company is out of your control. There's not much you can do about it. So my suggestion is that try to put the hours in. Look, I talked about that my Boston Ironman. Good, bad, sideways. He puts in 80 hours a week, literally 70 to 80 hours and 3K to 3,500 every single week. And he plays hard, works hard, and he bought a investment property in Brazil. He's Brazilian. He bought an investment property with the money he makes from Uber. He has a kid and a wife, obviously. He bought an investment property in Mexico already with all the money he's making, but he works hard. And there is no antidote for this. You got to put the hours in to get the money out of those companies. And, and whatever you have, even if you put in 40 hours, 50 hours, I don't know your actual life story, but when you do a live, I think you remember, yeah, you remember when we do the live, members live, you can ask me other things and I can ask you other things, is you got to put money away. It's not the rideshare company deciding, it's you deciding. It's you putting the hours in and driving. Bad offers, good offers. You will make something. You have to look at this as a transition. Yes, I will put my 40 hours in. Under the worst case scenario, I'm going to gross 1,200 or 1,000. 250 goes to a week. 250 goes to my gas and expenses. The rest I'm going to take out of that 750, spend it on my living, whatever, but I'm going to keep 100 of it at least and put it in my little account. That's the attitude you have to have. You're playing the victim there by saying the evil rideshare company let me down. No, they're doing what they're supposed to do, and you're doing what you're supposed to do. Circle of control, circle of influence. I have both, which I enjoy, but in certain things, I'm also out of the circle of control, right? But I control my destiny. I'm not going to let some other evil empire control my destiny. But I'm telling you, you got to put the hours in and see the fruits of your labor in a year or two. When you put the hours in without, fail, you put the hours in, you will earn something. I don't know what city you're in, but you will definitely earn something. If in LA, which is one of the worst markets, or Florida or Arizona, the bad market is Texas, you will earn 20 to 23 to $25 an hour, even if you accept everything. Okay. I know I say cherry pick, do this, do that. Certain people can do that in certain times. Maybe your times you're not available to drive. But if you drive 40 hours in any city in the US, okay, any city, and keep your active time 40 hours, accept everything and move on. Accept your fate. Don't get upset. You will see 1,000 to 1,200 in your account every Tuesday. Okay, take your expenses out. Let's say if you did 1,200, that's 1,000, right? I don't know your living costs or whatever, but I know a 10% or at least maybe 10% of the 1,000 you can put in your account and do what you can do. So I am just kind of saying that you have to have this attitude until you get out of the rat race, man. You know what I mean? So, okay. Well, what are you complaining about? Okay. Okay, cool. I thought you were just completely dependent on those evil empires. Cool, man. Cool. All I know is, but we're talking about recessions. I don't know how the guitar building business or amp building business, um, what happens to it when we get in a recession. So are you factoring all those things in? So any other questions? No other questions? Well, much love to you all. Thank you for hanging out. I will be back Monday trading with Sergio. Hopefully these positions have doubled, tripled by then or whatever. I didn't buy the Novembers because I'm going to get shaken out. But if I'm given the opportunity to sell for a double, Yes, I will. Again, don't forget, it's an overall trading equity. We're trading equity. We are not trading this position, B position, C position. No. I look at an overall equity and I can manage that risk a lot better because then I'm seeing the live number. If my account is $1, it goes to 90 cents, I'm down 10%. Okay, I can sell everything, stop it at 10%. You can control that, right? So you have to start looking at it that way. Trade equity. Don't trade individual positions will get if your individual positions are managed properly, your equity will keep going higher and higher and higher. It's not about I bought sleep number, it's one of my only position, I'm going to make 3,000%. It doesn't work like that. Even if you do, what part of, is it YOLO? Like, is it all of your account? No, like when I put in $5,000 in sleep number, it was like 3% of my account. I'm like, who cares? Right? Now, if sleep number doubles, it'll give me 3%. And I will take that because those are good. So look at the individual positions, manage those in a way that you're trading equity, if that makes sense. All right. So much love, Michelle. Welcome to the channel. Thumbs up. Please grab a membership if you can do it. I think it's worth every dollar of it. And so if you guys no more questions, I'm going to jump off and see you guys Monday, 11 o'clock, 11 a.m. Pacific, because I have a meeting. Thanks. This is a big. Okay, you too, man. You too, everybody. Be safe out there if you're going to drive. Please have a dash cam. Be safe. Stay healthy. Circle of influence, circle of control. That'll be your homework until Monday. Think about it. It's really powerful stuff. So with that said, much love. Stay healthy. Stay safe. See you Monday.